Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July the 5th. I hope you had a great long weekend towards Independence Day. And if you were on the markets on Monday, that was a very quiet day. So I hope you enjoy some time with your friends and family, and I hope you are ready for this week because currently we are in a nice setup for continuation to the long side, but after these 2 days of low movement, low liquidity, we have to really be patient and wait for the economic data and for the news ahead of the week to really move the market. Today, we got two pieces of data regarding factory orders month over month for May came flat, same as the previous one. We were expecting a little bit of increase in orders that will show signs of more movement on the factory side, and excluding transportations still in the negative. Every eye in the market is pointing towards FOMC minutes, but I don't think this is going to really do a huge movement on provide liquidity and volatility today, because we already know what is the stand of the Fed. So until then, that's coming in a little bit more than half an hour. I think this video will come out more or less at that time, so I don't have time right now to really cover that. But let me tell you, this is our daily setup on the Nasdaq, and we are breaking out these higher highs, higher lows, and these wedged descending resistance in the daily towards 15,475. That is these previous all-time highs, well, year-to-date highs that was on Friday, June. So this is for the daily. On the 1 hour chart, as you can see, this was the range in which we are right now between Fridays and Mondays. And as you can see today, I was watching this support from Friday that was respected on Monday, and today in pre-market, that's really the point, we were quite trending lower. But look at this move into the open. We spiked through the open. We pushed last week high, that is this dot line that is right here on top of the prior high on Friday that established the last week high at 15,376 that we basically destroyed into the open. We destroyed that into the open, we consolidated there, and then we pointed towards, if we check the 2 hour time frame, we pointed towards this zone that was the year-to-date high on Friday the 16th of June, around 15,000, let me check, 15,400. Then we tapped that one, and then dollar started showing signs of strength, and I think a lot of people really took profits on this move up. And basically, we are trying to hold in the green. Nasdaq is only up 0.09, and S&Ps are actually in the red, 0.16. But watch the dollar. Watch the dollar, because it can provide really an edge in this market. Strong dollar causes the stock market to see weakness. And if you find convergences, with the gold going lower, as you can see, continuing trending lower, it's quite weak, the same as copper. Dr. Copper showing signs of slow demand, but look at this sneaky higher low. Let's see if that continues higher, because we either bounce off this trend and try to reclaim 3.9 on copper, or really see continuation to the downside and a retest of 3.5 that will show that economy worldwide is sick. And also silver, it's quite bouncing off this beautiful 61.8 fib retracement down here. and trying to reclaim 72,000 on this bear flag continuation that we got on 19th of June. So basically, there are a lot of concerns regarding China demand and the future of stocks in the upcoming earnings now that we finished really strong on record on the first half of 2023. Eyes are pointing towards worldwide economy and the kind of strong demand or really weakness that we are seeing coming from China. There's a lot of concerns on that. So we might need more economic data that will show us that basically the economy is strong, recession is avoidable, and demand is really there on the consumer side. A little bit of weeks coming up, bottoming weeks up here ahead of the 2 p.m. This looks like it can reclaim more levels today, but basically we gap fill today. On the gap down, we tried to continue higher, we were denied, and we are basically flat. As you can see on the daily, there's a huge doji up here. That might change later on with the FOMC minutes, but after these 2 days of holidays, trust me, there are a lot of players, participants on the markets that are taking off the entire week. So don't expect huge moves, but watch the markets. Watch the dollar, because for example, Europe is doing a 1.3 in the red. Look at these descending triangles for the FTSE, the UK 100 index. And that's looking pretty bad. The Russell is pulling back 0.72 right now, and all the banks, most of the banks are in the red. So a lot of uncertainty regarding the Nasdaq. The only things that are insanely strong is Google, 2% on the day, and Meta, more than 3% on the day, trying to fill this huge gap ahead of 323. So we have to wait for the close today. I'm really interested in seeing how we close today. We spiked into the open, we reversed pre-market action and overnight, and we are trying to hold last week high at 15,376. So be patient, wait for the FOMC minutes and see if market wants to continue higher. Tomorrow, Thursday, we have ADP employment change, quite important, employment news, and ISM services PMI. This is super critical to really see if services still has sticky inflation as of right now, because Fed is really watching inflation on the services sector. So we are expecting 51. So be careful, because if services PMI is higher and services employment shows higher than expected reading, we might see a little bit of weakness coming into the markets, because that will show signs of sticky inflation in this services sector. So Thursday, it's all about services, and Friday, non-farm payrolls, NFP, and unemployment rate with earnings month over month and payrolls on the private sector. Friday is really important to see if unemployment is going higher, that shows signs of strength in the labor market, and if non-farm payrolls continue shows sign of wage increasing, that will most probably cause an uptick on inflation. Wages are really important. Money and earnings of the average payrolls is really important. So Friday is going to be huge. And I think that's all from my side. Let me check one last time the Nasdaq on the 1 minute time frame. I think we are just hovering between 15,300 and 400, trying to wait for these FOMC minutes that are due in 30 minutes. So nothing else from my side. Thank you for your time. If you found this video useful, please support the channel, click the like button and subscribe, because I upload everyday videos for market forecast, market updates, and market recaps. I appreciate your time as always. Let's see how we close today, but be patient this short week, because anything can happen. We are in a nice uptrend. Be patient. Don't ruin the start of the month. and really be disciplined and manage your risk, because markets need some kind of push, news and information to really show a new trend continuation, or maybe perhaps a trend change for bears to really participate in the market. So thank you for your time. Stay safe, everyone, and see you tomorrow.